this is Shannon Smith from Smart Business Solutions Financial Planning. I want to talk to you today about what's the difference between an agreed value and indemnity contract as one of the options in the insurances. So what is an agreed value versus an indemnity contract? If you're looking to take out income protection insurance, one of the questions you may have is, what is indemnity value? Depending on the specific product and provider, taking out an income protection insurance policy may involve choosing between two different benefit structures, an agreed value or an indemnity value structure. So what's agreed value? Agreed value is relatively self-explanatory. It entails you and the insurer agreeing on a fixed benefit amount, the amount that your insurer pays you in the event of a successful claim at the time you take out your income protection policy. Now, the latest update from March 31st in 2020, the agreed value income protection policies will no longer be available for new policies. So you won't have a choice. What it does mean, when we are looking at your income protection insurance, we will take that into consideration when we're evaluating whether you should look to changing your insurance policy or not changing it. If you are in an agreed value insurance policy, we may not change it if that is more attractive for you, given that you cannot get an agreed value going forward. So what does an indemnity value mean? In the context of income protection insurance, it basically means that the benefit value of your policy is to be determined by your income at the time of your claim, rather than being set at the time you take out the policy. This means that you won't be required to provide as much proof of your income or other financial documentation when you take the policy out initially. However, you still may need to provide some details regarding your occupation and other personal information in order to be approved for the indemnity value income protection. So is indemnity value better than agreed? Look, it really comes down to your personal circumstances. It's not inherently better or worse than agreed. However, depending on your personal circumstances and the nature of employment, you may decide that indemnity value is a better choice for you. And some of the main differences are indemnity value generally involves paying lower premiums than you would under an agreed value policy, but you could end up with a lower benefit to match, in a sense, depending on your income at the time. Agreed value income protection may provide you with additional peace of mind, knowing exactly what you will be getting each month should you need to claim, but it is now less common and typically more expensive than an indemnity value policy. So do you have a choice? You used to have a choice in the past, yes, but from March 31st this year, agreed value income protection policies are no longer going to be available. What does it mean? If you've got an existing income protection policy, you'll need to consider the impact of changing providers if you can no longer get that agreed value elsewhere, and maybe that will be something that we'll consider in that change to make sure we're getting the best outcome for you. Now, if you've got any questions in relation to this, please don't hesitate to contact us. We'll be happy to help you out. Thank you.